The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful Money Masters and Treasure Hunters. Welcome to the February 19th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome, as always, is to help you become a better money master and to empower your human potential, because, folks, you have got amazing potential out there, and I want you to take advantage of all of that and help you to increase your probability of success. That is my mission. Let's go take a look at one of our tools to get our mind right here. Let's go take a look at one of the quotes from one of my favorite books out there, The Art of War. And it goes like this, folks. Appear weak when you are strong, and strong when you are weak. Let's go take a look at these markets out here. Let's go determine whether these strong markets are strong or weak out here. Right now, you've got the Dow trading up 54 points out at 14,035, up and over that 14,000 mark. We'll go take a look at that. The S&P trading up 6 points at 1526 right now. The composite up about 11 points out at 3202. The small caps, the Russell 2000, up 5 points out here. Making a move this morning, you've got Google up $9.77 there. The leader in the clubhouse, that's up about 1.25%. Right behind them, the Red Robin Group out with nice numbers this morning. Maybe you are into burgers, or into that restaurant chain, up 18%, up $6.70. Rockwood Holdings, ROC, is the ticker symbol. They're up 6%. That's up 360. American Wood, can't see the rest of it. MWD out there, up 11% this morning. VF Corp up 2. Infinity Pharmaceuticals, or Pharmacy, INFI, up $3 and change. That's up 8 3/10% out there. To the downside, leading things to the downside, Humana off 10%, off $7.45. Equinix off about $6. That's down 3%. Group 1 Automotive off triple nickels out there, $5.55. Off 8 3/10%. Apple. Ooh, we will take a look at Apple. Apple down $4.80 right now, trading out at $4.55. Wynn Resorts down $3.30. Our call number is 877-927-6648. But let's go peek in here on the S&P 500. We've got divergence out here all over the place. The divergence here, the black line that you're looking at my chart, happens to be the price of gold out here. Now, when I say the price of gold, don't pay attention if you are watching us on Tiger TV to the numbers off of the side. It's not on the same scale out there, although it could be pretty close. If we take a look at price, just simply with regard to price movement, the black line on my screen. And if you are listening to us on the radio, thanks so much for doing that, or maybe using TFNN.mobi. Remember, you can always catch the archive. Not the archive. You can always catch the live stream of this show, as well as the archive, but the live stream of the show by going to the homepage of TFNN.com. Over on the right-hand side, you will see the 3 smartphone buttons. Click on that. You'll see this show streaming live to you on your smartphone device, or catch the archive on Channel 10. And typically, the S&P correlates pretty well in price movement to gold. You can see that just simply by watching the stock chart, that we're showing on Tiger TV. Of course, there has been no correlation whatsoever ever since the February 6th time frame. In fact, it has come totally unglued out here, totally unhitched. We're going to take a look at gold as well. If we do take a look at if this is a real breakout, your question would be, well, Steve, where is the S&P headed to? Real breakout says 1555. That would be the 1.618 expansion. That would be the 1.618 butterfly pattern. That is off of the swing point high of September 14th. 1474.51 all the way down to the November 16th low that was put in out at the 1348 level. And you're really you're getting pretty darn close to really it trying to break out and, in fact, do that out here. But there is some divergence in the marketplace. I will tell you that the bond traders here have not necessarily bought into this. If we switch over and take a look at bonds right now, just having a slightly sideways move to slightly up out there. Not exactly what you would expect to see with our markets doing the zoom, zoom, zoom. this morning. If we go take a look at the futures markets, the futures market between that 9:30, let's actually go into the 10-minute chart and see when they were hit here. Futures markets began getting hit right at 9:40. 9:40 for a period of 40 minutes, well, 30 minutes out here. Of course, you can see on the intraday chart here getting into the oversold condition. If you're going to be buying something, folks, you want to make sure that you're buying, and it just depends what time frame it is that you're trading on. You want to just simply be aware of the EKG of the markets out here, and I suggest one of the best EKGs is using that relative strength indicator, relative strength or relative weakness. You want to buy when it is down towards the oversold level. You want to be selling when it is towards the overbought territory out here. But you can see all the futures markets. We're looking at the ES Mini right now, all getting jammed here from about 9:40 for about a good 30 minutes solid there. Good volume coming in there. Of course, that says, okay, I'll come back to the breakout level, the breakout area on the ES Mini would take you right back to the 940-ish range of about 15.19 out there. That's on a 10-minute chart. If we take a look at the 30-minute chart out here, you can see really the same thing. Of course, you know, if you're looking at a 10-minute chart, you're going to get quite the heartbeat. You're going to, get a lot of noise out there. You go ahead and you keep backing things up to larger time frames. You get more of a filter. You get a little bit less noise out here. We can see on the 30-minute chart out here also getting up towards that overbought territory. Now it has to work its way off. It can do that by either moving sideways or, in fact, pulling back. That's what the ES Mini, of course, on the pullback here in this 30-minute session was up on the last 30-minute session with 228,000 contracts. So it had some good volume behind the move to the upside, 60,000 now as it pulls back here. So we'll go take a look at the yin and yang inside the markets. Let's go over and take a look at the SPYs. We'll take a look at the daily chart, and then we'll go take a look at the intraday chart out here. So the SPYs making a new high this morning out at the 152.87 level. Of course, the next level, if this truly is a breakout that we are seeing here, 156.40 is where the SPY would head up to. Again, divergence as these highs are being made out here. We go take a look at the volume so far today. And, of course, we had options expiration on Friday, so you had some pretty big volume inside the SPYs, 215 million shares out there. If we do take a look at the intraday charts here this morning, as the futures markets were getting hit here, you can see volume so far, nothing. You can see just simply the intraday chart. You can see really getting up towards the oversold level out here. Overbought level, my apologies here, overbought level as we came into that 10 o'clock session, getting a little bearish candle. We'll see if we have some follow through here. This is a 10-minute chart going into the 10:20 session out there. I would expect that at minimum, if this is a breakout, you would see the SPY come back to at least the top of the gap. That would be the low of the 940 session out there, which would be the 152.36 area. That is on the SPY. Let's go take a look at the other indexes out here and see what it is that we see. Let's start off by taking a look at the NDX 100. Okay, we'll look at the NDX 100. Then we'll go take a look at Apple, because you got Apple trading down $4 and change. So let's go see what that. In the NDX 100, we've got a Gartley sell pattern. Now the real Gartley sell pattern would complete a little bit higher than where it is, but you've got that nice 1.618 Fibonacci expansion of your B to C swing point. B to C swing point on this is the high of December 19th. Price is 27. We're going to round it 27.14, and the low is that December 31st low right at the 26.66 level out there. You can see the expansion came in on February the 8th. What the NDX has done is just simply traveled sideways out here. Still a weak the weak index inside the entire chain out there. Let's go take a look and see what Apple is doing here this morning. AAPL, for those of you that aren't familiar with the ticker symbol, that is what we're going to take a look at. Apple had come back and tested out as it was moving up. Got to get a nice bearish candle here on the 12th of February. And Apple has done, even though it hasn't closed the entire gap, what it did do is it moved into the swing point from January 15th. That swing point low was 483.38. It got up to 484.94, closed back below it. did it with 18 million shares versus that downdraft versus that candle of 31 million shares. Didn't have enough to bust it up. Now what it's going to do, it's going to go try to bust him down. And by busting him down, it is going to head down to, at a minimum, the low. The trading session that's in right now is a January 24th candle. That low is 450.25, but I really suspect what it will do is move all the way down and test the 435 level. That is the low from January 25th out there. But that volume has 43 million shares, and I suspect that is what Apple is doing. We can see Apple also working off its oversold condition. Did that as it made its retracement to about the 50% level of that relative strength indicator out there, and now it is backing off and moving lower. Volume so far, 4.1 million shares. Let's put this on a shorter time frame and see if we've got any kind of volume here behind this move. The volume really coming into Apple from 940. So you had the folks spiking the futures market here at 940, and as they were doing that, they were also selling Apple. Something to think about. At the exact same time frame, folks, you had 2.2 million shares come out that session, 1.7 the next session. The third session here coming into 10 o'clock. Volume dissipated a bit, and they hit Apple again at 10:10 out there with a couple million shares out there. Something to think about. Kind of a nice linear move in here in Apple on the way down. Looks to me like another prop desk selling and getting out of a position out there. Very interesting, says Schultze out there. Let's go take a look at the other indexes here. Let's go take a look at the Dow. Then we'll take a look at the Russell 2000. We'll take a look at the New York Stock Exchange. As we take a look at the Dow out here, the Dow having gotten over and testing. So today's going to be an important session for the Dow. Why? Because it has had a resistance area that was really set up by the bearish candle. We're going to take a look at the resistance area. Is the high of February 1st. That is the 14,019 level. You did get a close just slightly above. No, you didn't get a close slightly above it. I take that back. I was looking at the trading session from February 12th out there. So it is the 14,019.78. It's trading at 14,027.60 right now. That is the number that you would want to go ahead and write on your sheet of paper that you have. The Dow did make a slightly higher high today, I believe, 14,044.48, which is, yes, it did, up over the 14,038 from February the 12th out there. So the Dow is actually, as I take a look at it, it's giving some something to think about, signals out here as it continues to try to make just these slightly higher highs and gets rejected here at this level. Now, if you do get a close above 14,019.78 out there, what you will see is you will see a change in polarity, just like on the S&P 500. Now, in the Dow, actually, probably more important because this level here has been tested several times. You've seen a move sideways here really since that February 1st level. So I would say the Dow is probably one of the more important stock indexes to follow today as to whether or not you get a close above that. Because if you do, you got the S&P that's kind of leading things, trying to take the tide up and out. And will it go ahead and take the Dow with it? 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Master Show, folks. Dow is up 46 points right now. S&P is up 6. Russell 2000 up 5.5, trading out at 928.70. No stop in the Russell 2000. We're taking a look at the pattern out here on my screen. It is a larger 1.618 butterfly pattern. That is taking you back to the highs of March 27th out there when it was trading out at the 847.92 level. You know, on the way up here as we go ahead and take a look at it. And a couple of days where the bears were trying to take control. That was the day of January 30th, as well as February 4th out there. They tried to exert their influence on Friday, but just slightly as the Russell 2000 did move to a higher high. It sold off most of the trading session, but really no bearish candle. In fact, out of a type 0 to 5, from a bearish candle standpoint, that would have been a type 1 out there, 1 being the weakest, and you can see the weak hands being taken out here this morning. But I do see some divergence inside the Russell 2000, but need the bears to show up. Where can the Russell 2000 trade to from here? Well, let's go take a look at the this set of swing points here. This is the September 14th level down to the November 16th area, and that would be my next target here would be the 1.618 of that. Not that much higher, really. 933 out there, trade at 928.94. In fact, that is really what the Russell 2000 wants to do. It wants to move up and at least tag that area. Now, up there, we will probably also have, not probably, we will have another butterfly pattern. Let me see if I can color this one in, maybe in a different color. I don't know if I can do that on this computer here, but that would, in fact, why even waste the time? It's just headed towards 933. At least that's what it looks like right now, and with it being at 928.97, no reason for it to not go tag that level. That is on the Russell 2000. Let's go take a look at the ETF structure and take a look at the IWM. As we pull up the IWM here, trading out at 93.32. We can measure the same set of swing points and take a look at expansions there. And that's September 14th's high down to the low. On November the 16th, the 1.618 expansion is 93.65. It's traded at 92.33, so I suspect that is where the IWM is headed to. And we also, if we take a look at just A to B equals CD patterns out here, your 1-to-1 A to B equals CD completed at the 90.70, 93.04 is 1-to-1.272. So really at 93.11-ish, 93.65, you've got two patterns that are completing, and that says that is where the IWM wants to travel to. Let's go back to the indexes here. So we took a look at the Russell, we took a look at the Dow, the S&P, the NDX. Let's go take a look at let's go see if the New York Stock Exchange is going to go rescue those passengers at that stranded Gilligan's Island, and it most certainly is. You had a nice island reversal here that occurred on February 1st. So I think watching the New York Stock Exchange today, also important. That high out there was 89.70.32. Right now trading out at 89.80.65. So those passengers were picked up a little bit better than the was it Carnival Cruise Line, Royal Caribbean? I don't know which one was stranded out there, but that was a difficult scene. This island reversal here, though, being revoked here today as the New York Stock Exchange moving up over those highs of 89.70 out there. That is the swing point that the New York Stock Exchange is taking on. Let's go take a look at we looked at Apple. Let's go take a look at the currency market, see what we have going on here. I'm going to go ahead and put this down just simply into the 30-minute chart, see if there's any breakout going here, and there's not. We're just taking a look at the Euro 30-minute chart. We were looking at this during the first hour, taking a look at the sideways consolidation move that is going on out here. So currency-wise, we're not seeing any kind of breakout session. We do have the King dollar, U.S. dollar index up about 5 pennies right now. If I pull up the U.S. dollar index chart out here, what we're going to see is the U.S. dollar index is going to run into a resistance area. It looks like it's just kind of building some cause here sideways to try to take on the resistance zone that was really set up by the gap down from that occurred on November 21st to November 23rd. That low is $80.94. So far, the high that was on Friday was 80.83, and I do suspect we will see the U.S. dollar index spike that area. If it gets over, then you'll see a change in polarity on the U.S. dollar index. That would set up a move higher. That would put some additional pressure on gold, silver, oil, and that is what I suspect we're going to see, as well as the stock markets out here. Right now, you've got oil trading down only 22 cents, gold off $6 right now, and silver down 1 2/10%. We'll go take a look at silver when we come back from the break here. Silver off 34 cents. 877-927-6648. Ooh, silver getting whacked. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Before we went to break, I was noticing silver was starting to get clobbered, down 1 4/10% right now, off 42 cents. I've got the intraday chart up on the screen. You can see as we were coming into that segment there, truly getting hit with volume-wide price spread, 39, almost 4,000 contracts in that 10-minute session coming into the 10:30 mark out here. So that is on the intraday chart. We'll go take a look at the daily. I will tell you, as I took a look at the commitment to traders information over the weekend here, some very unusual things going on inside the silver marketplace out here. I'm not sure what it means, but right now, one of the things that it does mean is we take a look at, regardless of the commitment of traders information, we do take a look at silver. It is making a beeline back to the swing point. It is now catching up to gold out here. Let me get rid of some of these lines. If you are watching us on Tiger TV, those were the retracement lines off of, this was not a hammer candle. It was close, and certainly the bulls took charge on the trading session of January 4th, and that's what it's trading into. 41,000 contracts that day, already 45,000 contracts. It is set to take out the lows out here. Silver had been acting the strongest. Looks like that was nothing more than a head fake out here. So one of the big divergences that we have out here, and we were taking a look at the futures market getting spiked higher, and we were seeing at the same time that the futures markets were getting spiked, we also saw that someone was selling Apple out there at the exact same time out there. That was one of those things where we just kind of stumbled upon it. I was glad that we stumbled on it because it does make you say, And we're also seeing here that the commodities are also getting hit here, continuing to get hit. And right now the support on silver, is going to be the low of that swing point on January 4th, which is 29.24. It's going to blow right through that. It's going to have the volume most certainly to blow right through that level. So let's pull silver back here a bit. Then we'll go peek in on gold. And so where could silver could be making another A to B equals CD down. In fact, if you get it close below $29.24, that's exactly what silver will be doing. So let's go here's the first A to B equals CD down. It was a 1-to-1 A to B equals CD down. It truly did complete and test on January the 4th out there and set up a nice little buying opportunity. In fact, there's a pattern that exists out here. It's going to be the pattern that I'm going to be teaching folks tomorrow evening from 6:30 to 7:30. If you haven't heard, I'm going to be doing a workshop. It's for all of my clients, and if you're not a client, you can get in on it. You can get in on the action. You're basically putting down a deposit for a 1-hour session out there. You're more likely a little bit longer, but I'm going to show you a pattern. This pattern, folks, it is so amazing. It's the 1-hour session that we're going to do tomorrow will absolutely be my best work. And I know the work that I did on Buying the Sun, the D-Point, that online workshop, and the workshop on Candlestick, each of those were also my best work. But this 1 hour, what is going to be inside this in that 1 hour, it's going to give you the formula, the secret formula. I don't call it a secret formula. It's really been in front of us all this time out here. And all I've done is I took the work that somebody else did and just simply made it better, much like each of us do. If you own a restaurant, you might eat some meal somewhere, and then you just simply put your own touches on it, or you do it in your own kitchen or what have you. And each of us, that's really what life is all about, is taking something that somebody else has done. Maybe you see something a little differently that wasn't visually seen before, and that's exactly what I've done here. And the results, I'm almost embarrassed to share with you the results because people will be like, it's too good to be true. It's not too good to be true. This is a formula that it doesn't matter what your skill level is, you can follow. It is a set of guidelines. If you just simply play it like a game and you don't start to get over anxious, one of the problems is knowing when to buy, when to sell out there. And if you just simply follow these rules, the results that are produced in a short order in just simply 7 months is like 83% or 82% return. That didn't mean that the market didn't continue to even move higher after you sold and you made a nice profit out there. But if you follow these rules, folks, and this is what I'm going to be teaching tomorrow, just go to the homepage of tfnn.com, sign up for it. Allow me to teach you this. It'll be a huge gift. It's absolutely my best work, and I know you'll think so. And look, if you don't like it, you can just unsubscribe the next day if you want. But it'll be the best hour that you will spend, potentially for some of you, for your entire life when it comes to trading. And it's easy to use and it's easy to follow. The only thing is you've got to be patient for the setup. But the setups are easy to identify. They're visual, so that makes it very nice out there. And it's just like having your own fishing hole out there. They say don't fight the Fed. Well, this trading plan here has gone through highs and lows, ups and downs, both sides of the market, setting up both sides of the trade. So the homepage of TFNN.com, I don't know if it's going to be under breaking news right now. There is that special report that was out there. Reading the message of the markets. That's really the title of the workshop as well. But just click on my name where it says A Trader's Edge. It'll take you to the sign up for my Mastering Probability newsletter. Again, it's all unconditional 30-day guarantee on that. But just do yourself a favor and go out there. Now, if we take a look at the A to B equals CD down pattern here, I was saying that the pattern that would have given you a signal to actually take a long trade in silver as that hammer candle is being made on January 4th. And we know that low is going to be tested. If it doesn't get down there today, which is 29.24, and it's just building up volume, which it is doing here, and not taking that area out, that would say tomorrow we would likely see a huge move down in silver. But if silver, it's got the volume today. You get it closed below 29.24, trading at 29.43. The next A to B equals CD down pattern on this because it would have the volume to take out that swing point. A 1-to-1 A to B equals CD would be $27.32 out there. Now let's go see what $27.32 will do. This is coming off of, one heck of a nice move off of its lows. The most recent swing point low was June 28th out of the $26.10 level, all the way up to the highs on October 1st. So you can see that actually takes you down below sweet 786 out here. You're below the 618 retracement level. It's really trading right around that area. The 0.786 is $28.10. Yes, we can see silver getting into the oversold territory out there, but something is going on inside the commodity sector that does not at all tie into what we are seeing going on inside the equity market. You got the DAX is up 1 0.6% right now, up 120 points. The FTSE is up 0.8%, up 53 points out here. I'm telling you, the commodities are behaving like something else is happening in the marketplace out here. Let's go and take a look at gold, then we'll take a look at oil. We take a look at gold. Now, gold here not making it down beyond the lows of Friday yet. But you do have volume picking up to the downside. So not a good sign here. 152,000 contracts today, 174,000 contracts on Friday. And 1584 is really the next stop on its journey down, but looks to me like gold will go ahead and move down to 1526 out there. So gold here is still a little bit weaker, just a little bit weaker than silver, but silver is catching up in a hurry out there. We take a look at light sweet crude. Light sweet crude so far today has, let's see, the low of Friday, 95.21, moved down with 174,000 contracts, 95.21. It got to 95.25 today. Light sweet crude is going to make its way back to 92.82, more likely $89.47. We'll see if it finds any support here at the 200-day exponential moving average. That would be at a price of about $92.46 out there. So 92.46 as well as a 0.382 retracement at 92.82 is where we'll see if light sweet crude will get any type of support out there. We got bonds. Bonds are not buying into the this little spike up that we've seen in the markets. At least they are not buying into them right now. And bonds are really set to travel all the way up to their resistance zone. That is going to be the high of January 2nd out there, right in the 146,100 level. That's what it looks like to me bonds want to do. If we take a look at natural gas having a nice trading session today, nice little pop, no volume behind this move. Natural gas wants to make its run all the way down to about the $3.47, maybe $2.90 level out here as it moves down now to the downtrending price channel that it is traveling into. So that is on natural gas. Let's take a peek in on some of the ETFs for the S&P sector out there. Let's take a look at the 9 sectors. Let's take a look at the financials. You've got the XLF trading out at 1790. Now, you want to be paying attention to the financials for sure because they have been the strong hands out here. And I'm referring to strong hands off of the October 4th level and November 6th level, June 4th as well. Looks like what the XLF wants to do is make a move just a bit higher up and around the 1839 level. Doesn't have to do it before the market might retrace. The XLF will want to come back and test the area where it broke out from, which is the swing point of, I would say at least the February 17th area, which is right around 1720 to 1789 right now. But not much in the way of bearish-looking action in the financial sector. Let's go take a look at that energy sector here. Let's go see what it is doing. That gave you a little bit of a bearish reversal here on Friday's trading session. And we did have options expiration, so you had some good volume here. 14 million shares on Friday, just having an inside day, so no real message, no change in message here in the marketplace in the energy sector. Let's go take a look at technology. Of course, technology not really doing much, looking just like the NDX 100 out here. Just been really traveling sideways since January, since the beginning of January out there. So no real significant message here. You did have the XLK gap up off of the February 7th level. That is the 9 million shares that day, that high, 29.73. We did have that area tested on February 14th with 6.3 million shares. So that would be a positive tested because that had 9 million shares that it was moving up into both days, both the day that it gapped up, which was February 7th, as well as the gap up day, which had 9.1 million shares. So that was a positive out there. But still, the XLK not really able to do much as far as getting out of its way out there. Let's go peek in on some of these stocks here that are moving and grooving. Let's take a look at Icon Enterprises. IEP is the ticker symbol. They are the leader in the clubhouse on the way down dollar-wise, IEP. Let's go see what this is trading into. So moving down this morning with some volume after having a nice trading session here on Friday. How about this? So volume coming, this is going to come back to its breakout area, and it does have a high volume high. That means that it does, of course, you're getting volume off of the top today. So, and we're early in the trading session, only been an hour and 16 minutes. Friday made a high volume high with 290,000 shares. But today already 120,000 shares, so this is volume off the top. It's going to at least come back to the breakout area. Broke out on February 8th. That level is about $59, and anywhere from 59 to 61. It's at 71.14 right now. Let's go take a look at Equinix. EQIX is the ticker symbol. Let's go take a look and see what this is doing. EQIX. Let me type this in again here. So this is moving down. Let's go take a look at the volume on this and see what this is going to move down into. Should find some support here at the trading session from September the 13th. That level, we'll just draw the line across the screen. It's been tested. It is held. We'll see if it'll hold again. That's the black line, black horizontal line going across my screen here. That had volume of 6.3 million shares. Also, it broke out above that level with only 1 million shares, but you can see as this thing had pulled back, this thing being the stock, on February 7th, it pulled back with 758,000 shares, tested that area, rejected it. Looks like it also came back to the gap. So you can see this has some pretty good levels of support out here. We'll put this one in red. So you've got this high volume trading session from September 13th. You want to make sure that you always, have these high volume bars marked on your stock charts out here, as well as you want to make sure you understand where the gaps are. Those are, typically breakout sessions. And that gap was on December 31st. The high of that gap was 208. There was 800,000 shares. That gap got tested with 2 million shares on February 13th. Tested with volume, but being tested with volume and then moving up tells you that's a pretty strong support area. So Equix should find support. Equinix, EQIX is the ticker symbol, should find support at the December 31st high, right around the 208.91 level. You'd like to see it come back on lighter volume, and I'd say right now lighter volume than the 2 million shares from February 13th. Let's see, today 517,000 shares. It's coming back with volume out there. So we'll see if it can hold the support level on that September the 14th, September 13th, I apologize, is the day. That's the 212 level with 6.3 million shares out there. Let's go see what else do we have out here. Stocks that we haven't looked at. You got Netflix is trading up $3, another 2% this morning. Let's go take a look at this American Wood Group. AMWD is the ticker symbol out here. That is up nicely, AMWD. That is up about 11% this morning. That didn't like it. AMWD. We're going to take a look at that. We come back from the break. You got the Dow up 50 points right now. S&P's up 6. Composite up 11. Leading the charge. Google to the upside. Icon Enterprises to the downside. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments and all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at tfnn.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 43 right now. S&P's up 5. Gold and silver still getting whacked here, a little bit off of their trading session lows here. Gold is down $3 and silver off 34 pennies out here. In the world of wood, though, if we take a look at this is the stock chart we've got up on our screen here right now. This is American Woodmark Corporation. This is moving to the moon. I was in my left ear. Of course, I pointed to my right ear, but maybe as you were looking at it, was my left ear. I heard Tom chirping in. I think Tom here, because he started the Tiger Real Estate Investment Fund out there. He must be using American Woodmark Corporation. That's why they're getting this nice boost out there. And folks, if you haven't had a chance to download Tom's white paper, please do yourself a favor and go do that. That's at the homepage of tfnn.com. These folks here are in the distribute kitchen cabinets and vanities, and the remodeling of new homes and so forth, and headed back towards its highs back in 2007. 7 out in the $45 markets at $35.09. Continues to have nice volume and wide price spread. This is the weekly chart that we're looking at on its way up. It's got to clear some swing points out here. The next one it has to on the weekly chart is the June of 2007 level, traveling inside there, so it'll at least go up and test the 37.94, we'll call it 38 markets, trading at 35.09 right now. So having some volume, and you can see that volume here present on the daily chart on its moves up. Last time it had volume was on February the 5th out there, 478,000 shares, having some nice follow through here today, already 250,000 shares in an hour and 26 minutes. We've got LinkedIn is trading down. Let's go see what kind of volume is behind that move out there, if any. LNKD is the ticker symbol. And this had broken out nicely quite a while ago. Well, when I say quite a while ago, about 6 trading sessions ago on February the 8th out there. That is a nice breakout session. The move, and it did it with volume. Had 14 million shares out there. Today, it's 1.2 million shares in an hour and a half, so pulling back on some light volume. That is nice. You might want to peek in on LinkedIn, see if it moves all the way back to the breakout, most recent breakout session of February 8th, and that is the low of the gap, the 140.13. And don't be afraid to try to buy that gap, especially if LinkedIn can come back there on less than 13.9 million shares, close back above it. Then you'd like to see some type of bullish candle as well, or a test of that area 3 times would be nice as well. But it might set up a worthwhile reward to risk trade if it can close, and if it tests the bottom of that gap, and I'm referring to the candle of February 8th, and close back above it. That'll set up a support zone. And if it closes back inside, you go ahead and exit. Wait and see if it will pull all the way back to the bottom, which is the February 7th high out there. That would be 126.24. That's got 4.3 million shares. And this is, just an IPO that goes back to the May 19th time frame. So you will have some time to take a look at perhaps getting into this trade. But the stock chart looking pretty good here right now. That is LinkedIn. Let's go back in and peek into the silver contract here. Let's go put up that 10-minute chart here. And I think, well, let me see here. Was it this chart or was it another one? 10 minutes. 10 minutes. Where's my 10-minute? Out here. I think I just simply clicked on it on the continuous contract. But let's go take a look at the 10-minute chart out here and see what it is that we do see. So we can see silver, getting truly kiboshed at 10:30 with 20. Where's the volume here? Volume 4,000 contracts to the downside. Right now, these bounces. The bulls trying to take charge here in this last 10-minute session at 10:50. Stay tuned for Basil Chapman, folks. It is a terrific Tuesday. That means that we go out to Victor Jones on Tuesday from 12 to 1, Daryl Martin 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, the Tom O'Brien Show from 4 to 6. Have a great day, folks. Look forward to seeing you in the morning. Take care.